and welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and with me is Pavitra Parekh. Well, you are watching your stocks. It is a very lively market. We have new highs for our market, so there are a lot of queries in terms of what one should do with their portfolios, what one should do with individual stocks. Hi, Pavitra.
Hi, good afternoon. So, like you said, there's a lot of queries that we've been getting to, getting through the day, and we are going to get to that in just a bit. But the markets, it's been quite choppy, right? After hitting that record high in the sensex, we did see quite a fall as well. But now it seems to be picking up once again. Let's see if we can get to that level, around 30 points away. But I think we should stay away from counting down because that's when things really turn, right? Let's invite our guests on the show and then we can get to all of the queries. We have Rajat Bose joining us as well as Parthiv Shah, who's director at Tracom Stock Brokers, to take all of your queries on both the fundamentals as well as the technicals. So, gentlemen, thanks a lot for joining us. And let me start. The first query comes in from Srinivas, who writes in from Hyderabad. He holds 500 shares of IDFC at 52. Like you can see, he's, the stock is currently over 100, so he's made good money on that. He also wants to buy some shares of Punjab National Bank and IDFC First Bank at current levels. He's asking if he can buy these stocks now and, what is the call on his holding as well. Parthiv, let me come to you on this. A bunch of the banking names that he's looking at, he wants to buy PNB, wants to buy IDFC First, and does have investments in IDFC. So, what would you suggest on this? Parthiv, can you hear me? Okay, I think we... Parthiv, are you getting my voice?
Now I'm able to hear you.
Yeah. So I don't know if you heard that query, but Srinivas has written in. He has shares of IDFC at 52. He also wants to look at fresh investments in Punjab National Bank and IDFC First. Your call on these?
Sure. Thank you for having me on the show. Good afternoon all. IDFC Limited, I think, has done extremely well late, thanks to the fact that it is also a holding company in IDFC First Bank, and we have seen IDFC First Bank deliver stellar set of results since the last 2 quarters. And basically, we see that the fortunes of IDFC Limited are always linked with how IDFC First Bank does. And currently at these levels, what we are seeing is that the valuations are priced to perfection. And we do believe that eventually probably there will be a merger happening between IDFC Limited and IDFC First Bank. But here I think at these valuations in IDFC Limited, I feel that it's a good idea to exit out and book profits and convert into some other banking related stock. So in terms of PNB, I think we are not very upbeat on this particular public sector bank. No doubt we believe that the public sector bank still has a lot of legs and can do extremely well. So if the investors are interested for the next 2 to 3 years, then in terms of the PSU banking space, already we have SBI, which is doing extremely well, and still I think it's very undervalued, quoting at around 1.2 times price to book multiple. We also like the Bank of India. It's a turnaround story, delivering very reasonably good set of numbers, and valuations are still very attractive and it's not really caught up with the rally of the rest of the PSU banks. So these are the 2 PSU bank stocks that I can suggest to switch to.
Okay, all right. Well, it definitely has been much better for a couple of the PSU banks, at least in the past couple of weeks, if not on a year-to-date basis. But Rajat, wanted your thoughts. Would it be prudent to buy PNB at these levels as well as IDFC First Bank?
Well, from a technical point of view, PNB can be bought at the current levels. It is around 53, and I would say that you can use a very close stop loss of about 47 and continue to hold on, because PNB's chart structure suggests that there is every possibility of an upswing, and once it crosses 60, it will acquire further momentum. And over the longer period, I have a feeling that PNB can get into triple digits, maybe 1 year, 1.5 year down the road, that kind of levels can come in. IDFC First Bank is definitely a very good company. I mean, I have recommended this stock on your channel earlier to my clients as well as on my YouTube channel. So IDFC First Bank, but at 82, one can wait for a minor dip, say 77, 78 would be a very good level to buy. But otherwise, if one is actually investing for the longer term, then IDFC First Bank at 82 is fine. and I would suggest getting out of IDFC because it is showing some weakness for the last 3 sessions, including today, and there is a possibility that this downswing might continue. So it would be better to switch to either one of these two or both of these two and get out of that IDFC. That would be a better choice.
Okay, all right. So that's what coming in on a couple of these financials. Well, we have Shakuntala Bhamra, who writes to us from Uttarakhand, holds 18 shares of HDFC Bank, which is bought at around 1,200 rupees. Medium-term investors, so making profit on that one, and wants to know for how long can she hold on to her investments. So this is a call coming in on HDFC Bank. Well, Rajat, what would you recommend on this one? Is it a portfolio buy?
Yeah, it's a portfolio buy. One can continue to hold on. And HDFC Bank is supposedly one of the leading banks in our banking sector. It is one of the 3 too big to fail banks, ICICI Bank and State Bank being the other 2. And as of now, from a technical point of view, HDFC Bank looks pretty good because it appears that its correction is already through, and somehow you have a unique situation. This normally doesn't, I don't get to see, that is, say ICICI Bank is on a correction mode and HDFC Bank is actually getting into the buy mode. So a lot of people, I suppose, are getting out of ICICI Bank. These are short-term players I'm talking of, and getting into HDFC Bank. HDFC Bank today, technically speaking, it has actually taken out its 50-day moving average and it is likely to move up. Minimum target for the short term, when I say short term, I mean say 1 to 3 months kind of time, 1700 to 1720 can be envisaged for HDFC Bank because it took support on 200 exponential moving average. It crossed 9-day as well as 20-day moving averages, and those 2 moving averages have given a golden crossover in today's session, and it has also taken out the 50-day moving average. So it's a buy, and one can buy. And HDFC Bank, if one is buying for the longer term, there is absolutely no problem. You can keep it in your portfolio. It's one of the best blue chips available.
All right, we have got that, advice several times that this is one that you should just keep in your portfolio. It is that kind of stock. But the next query comes in from Meera, who writes in from Chennai. She holds 200 shares of Sula Vineyards at 398. She also has 550 shares of Indian Hotels at 340 and 5,000 shares of RailTel at 118. She's a long-term investor and wants this portfolio of stocks reviewed. She wants to know whether she should be holding these, selling these. Parthiv, your call on these stocks, and what would you advise if you could take us through all of them one by one?
See, firstly, talking of Sula Vineyard, we saw recently this stock had a massive rally. There was a huge upgrade by one of the institutional brokerages, and no doubt the results have been pretty good. But during the IPO, when we were seeing the financials, one thing that lacked in the company was consistency in terms of the volume growth. No doubt it's a great franchisee and it has some of the best brands and very limited competition in space. So going ahead in the longer horizon, we do believe that it will do well. But at this juncture, especially after the recent rally, I think we feel the valuations are priced to perfection. So I think if the investor is making some profit, no harm booking out. So I would suggest some profit booking here. Talking about Indian Hotels, despite the stellar run and quoting at around almost 33 times forward earnings, I think this company is on a great pace because in the hotel sector, we are seeing after a very long run, the average room rentals and the occupancy rates have gone up. And even in terms of the asset-light business model that they are now eyeing, I think they have a very strong balance sheet to grow. Very few hotels in the country have such good balance sheet to grow. And again, with the pedigree and the brand equity that they carry, I think this is a company which we feel that will still do extremely well. So certainly hold on to it. In terms of RailTel, I think it's a very interesting railway stock because we saw a stupendous run in most of the rail counters, especially the ones where there's a lot of EPC related work, names like RVNL or IRCO International. But here RailTel is a company which does a lot of digitization and networking related work for the railway sector. And more importantly, it has almost access to 78,000 kilometers of continuous broadband connectivity, which is quite exclusive and no other competitor can penetrate that. And looking at the signaling issues recently and unfortunate event of the recent accident, I think this company will come in the limelight. They're getting good orders, so I would suggest a hold on retail.
Okay. All right, so that's the word coming in on a couple of these consumption plays. In fact, Rajat, I wanted your thoughts, barring RailTel, your view on RailTel as well. But these consumption plays, which are really feeding into the urban urban consumer in India, Sula Vineyards as well as Indian hotels. Are these long-term plays? Are these portfolio stocks long-term buys? What would you recommend? And also RailTel.
Well, regarding Indian Hotel, I would like to say that, look, from a low of around 64.65 or so, the COVID low in March 2020, after that, there had been a major run. It has actually multiplied 6 times, and now it is close to 400 rupees, and there is on the weekly chart there is negative divergence, and it is highly overstretched. I wouldn't say that it has given a sell signal, but at least part profit taking is definitely warranted at these levels for Indian Hotel. And the same thing I would say about Sula Vineyards. Sula Vineyards, on the daily chart, it has actually moved from 320 to 470. There had been a correction once, and after that it has moved up from 450 to 400 it came, and then again now it is currently, today it touched about 480. I would suggest at least part profit booking even in Sula Vineyards. And regarding RailTel, I would say that, well, if RailTel you have to buy, then go for a buy. Otherwise, there are other stocks. There are stocks like HDFC Bank, there are stocks like IRCTC, there would be other counters which are actually looking much better. But RailTel is not, I wouldn't suggest that one should take some profits and get out of it. But fresh buying at current levels, that I am not recommending at the moment.
Okay, got that. You mentioned IRCTC. Our next query is on exactly that. And we have Shailesh Singh calling us from New Delhi with that. He's on the line with us. Shailesh, please go ahead, ask us your query. And both of our guests are on the line. They're going to help you out.
Yeah, good afternoon, everyone. My query was regarding IRCTC. I had bought around 50 shares at an average of around 900 rupees. I think I'm right now in pretty much red, and it doesn't look like that I might be able to recover the cost. So in that case, what would be the good level to exit IRCTC from the short to medium term perspective?
Okay. How long are you willing to hold? Are you willing to hold only for a short to medium term kind of period?
I'm willing to hold for maybe 3 to 5 years, provided if I see some hope for getting some profit or recovering my cost. It doesn't make sense. I guess it would be better to bite the bullet.
All right, let's ask the guests what they think of this as well. Parthiv, he bought above 900. The stock is around 600 now. So, I can understand his concern on this one. There was that time, right, when we saw that stupendous rally on IRCTC. But what does someone do when they've gotten in at those high levels? He's willing to hold on for 3 to 5 years. Do you think there's chance for that kind of, gap to be fulfilled again?
See, I recollect sometime during October, November 2021, this stock had hit its all-time peak levels of around 1020. And it seems the gentleman has nearly purchased at those levels. And even currently, if I look at the trail valuations, this stock is quoting at around 55 P multiple. So no doubt, I think it has a fantastic business model. We know that the rail ticketing business has picked up pace, and the convenience fee that they are earning is increasing quarter on quarter. So it's a fantastic business model, and this is the particular vertical of their business which garners them the highest business and the highest profitability. Also, the rail need and the tourism business is also giving good traction to this company. Our sense is that this stock might time correct. The reason being that already the valuations are kind of priced to perfection, and it is kind of factoring at least 20% growth for this year as well, FY24 basis as well. So only the investors willing to wait for another 2-3 years. Probably I do believe that over the next 2-3 years he might exit in some sort of profit, but over the next 1 year it looks dicey whether he'll be able to come close to his cost.
Okay, Rajat, what about IRCTC?
Well, I already vouched for IRCTC because IRCTC seems to be completing its, it has completed its correction, and as it is for several weeks, maybe 10 odd weeks or so, it has already gone up, and currently I think it is ruling at 665. I would suggest him to actually average his 900 rupee position here, because on the weekly chart, 50-week, 20-week, 9-week, all moving averages have been taken out. The 20-week Bollinger Band, which is basically two standard deviation bands, that is also getting expanded. So there is a possibility that IRCTC might show some momentum. And one thing I would like to tell this investor is that choose good stocks. It is not all that bad, and over a period of time, because you bought at a very high price, that's why you are suffering. It's not that the stock is bad. If you run after a stock at a very high level, then you have to wait for a longer period of time. But if you average it here, maybe within a couple of years, you will be able to get out of the stock profitably. So I would suggest averaging it.
Okay, but Rajat, what is the kind of target you have on this one? 664 on IRCTC right now. Where do you think we can get on this one?
See, it should be bought around current levels because the moving averages have been taken out, so it can acquire momentum anytime. So waiting for a dip to buy may not be a very good idea at the moment. The first target would be something like 765 to 770, and after that there would be another level around, say, 800, and once 800 is taken out, then I think that 900, actually the resistance is at 920. So that would be the target, 900 to about 920. So I suggest him buying here, and so that the price, his average acquisition price comes down, and once it hits 900, he should exit taking some profits, because 900 to say 1200, that rise was a vertical rise, and those vertical rise, it will take a lot of time to really rescale those levels.
All right, I think we all remember IRCTC going absolutely berserk in 2021 in terms of the stock move. Unfortunate that, you know, the buy price is very high, but, you know, like the guests were pointing out, doesn't mean that it's a bad stock. And considering that you have a 3 to 5 year horizon, maybe you could you know, consider holding or averaging at this level. With that, we are going to get into a short break, but when we come back, there are lots more queries lined up, so stay with us.
Welcome back. Well, you're still tuned into Your Stocks on CNBC TV18. We have Parthiv as well as Rajat joining in to answer all of your queries. We have one more query. Nagesh writes to us from Bangalore. He holds 100 shares of India Cements, which he's bought at around 220 odd rupees. He's a long-term investor and wants to know what to do, whether or not he should hold or sell that stock. Well, we do have some news coming in from Shree Cements. So just keep your eye out on that particular stock. The stock is down around 1.8%. The IT department is conducting a survey at 5 locations of Shree Cement in Rajasthan. Well, what is your sense on the cement space, Rajat, and India Cements as well?
Well, particularly about India Cements, I would say this stock looks really bullish. I mean, there is a saucer pattern, and chances are that the saucer pattern would be completed, because saucer pattern is a very reliable, regular pattern. It takes time, but it actually meets its target. Say that kind of a target would be something like 260 or so. So there is still at least 12-13% gain on the upside is still possible. Earlier it made a high around 300. That might be scaled up provided it doesn't face much of a resistance around 260. And on any dip, India Cements can be bought, because the moving averages are suggesting that the consensus view is changing regarding this stock, and accumulation, distribution is complete, then accumulation happened, and now fresh buying. There had been a huge buying on a particular day in the recent past, that was on say 9th of June. It clocked a very high volume of 21.56 million. So that means that strong money, or say you can say that institutions and others might be getting interested in this stock. So there is every possibility of it getting up to say 260, and after that maybe 300. And if one needs to put a stop loss, I would say that stop loss should be placed below 210.
Yeah. All right, got that. With that, Rajat, Parthiv, we are going to wind down on the show. So as always, thank you very much for joining us and taking out the time to go through all of these individual queries with us. We're going to wind down on the show with the market at 18,850. So, we've seen a good recovery from the lows of the day. The mid-cap index very steady, 0.7% higher. Thanks for tuning into your stocks. Remember, you can always email us your queries and we will take them up with our experts. Stay tuned. Closing bell comes up after this very short break to take you through the last hour of trading.